Hi guys, welcome back to another episode of Singaporean Talks Money. So today I'm going to share that your investments are not going to be growing linearly, and I'll be sharing my experiences for investing for the past 6 years. So my investment portfolio broke above 100,000 recently, and I would like to share some of my thoughts as a reflection as I reach this milestone. I started investing when I was 22 years old, which was 6 years ago, and what a journey it has been. There were moments in the 6 years journey where I thought building wealth was so difficult, and there were times when I felt money was so easy to get. It was indeed a roller coaster ride, and even so in the upcoming years. But all in all, I learned a lot, and there were some things that I hope I started doing earlier. So there were times when I thought building wealth was very tough, and when would I see any significant results? When I first started, I only had less than $100 or a low few $100s per month to invest. This meant that I needed to accumulate for a few months before I could buy. When I started, I only invested in Singapore stocks, so my portfolio was not increasing as fast as I wanted. Since Singapore stocks usually do not fluctuate much and is mostly a dividend kind of play. During my early 20s, there were no new brokers like Scythe Trade, Moomoo, Tiger Brokers, and even Interactive Brokers needed 100,000 in asset minimum, otherwise there would be a monthly charge. So at that time, I felt like it was easier to start with Singapore stocks. But if I could start again, I would start buying US stocks first, as the returns over the 6 years would have been better. I have to say that my investments only became significant after 2020 when it was closer to 50,000 and we sort of experienced a bull market in 2020 coupled with a change of job in 2021 which had a significant pay raise. I do believe that increasing your income is one of the main ways to increase and see significant effects in your investments, as you would have more disposable income to invest. There were times when I thought I was going to be rich. So the crypto boom that happened in 2020 to 2022 made me increase my net worth by a huge portion, although at the end I did lose a significant portion as well. But it exposed me to cryptocurrency and taught me lessons on risk and position allocation. My portfolio was up enormously, even reaching close 100,000, which was crazy. I thought I would be rich, and it was because cryptocurrencies rose at a rate that was so much more than traditional assets. To be honest, it was like gambling, and it was fun and adrenaline inducing. But I remember being so focused on prices at that time that I was stuck on checking prices and finding new ways to increase my net worth. It was pretty unhealthy as I was addicted to the excitement and price actions. There were some millionaires made during those times, but I'm not sure how many managed to retain it. In the end, I lost a significant amount too, but learned a lot over those few months. And at that time, I especially understood the phrase by Warren Buffett to be fearful when others are greedy, and to be greedy only when others are fearful. That really struck me after the whole crypto bubble and how it explained the whole situation so well. So, why your portfolio is not going to be growing linearly upwards? There are definitely good years and bad years. Your portfolio will not go up in a straight line. There were years where I contributed significant amounts into my portfolio, but it still resulted in a loss. There were also times when I did nothing, but it grew. There are many factors that can affect your portfolio. As long as overall your portfolio grows with the broad market index or even manages to beat it, then I think it is alright. For the early years of investing, you will be very doubtful, but over the years of accumulating and compounding, you will see a difference. Of course, this also depends on the things that you invest in, and you need to make sure that your portfolio allocation and risk appetite suits you. So let's talk about things that I would have done differently if I were to start over again. The first would be to always take profits, especially if the profits prove to be huge and it is a volatile asset. Always take some profits off first, especially if it gets too juicy. I know that investing is for the long term, especially when you're buying the index ETFs that track the S&P 500 or the STI. But during the crypto boom, I was in a profit on assets that were very new, and although there was an ecosystem built for it, it seemed very inflated by tokens and leverage, as people were able to lend and borrow for huge amounts. There were warning signs, and of course, being greedy and being in an echo chamber, I thought that it will go up endlessly. If I had just taken back my principal and left my profits there, it would not have affected my portfolio that much. Next would be to take some opinions with a pinch of salt, especially those with short-term outlook. X, previously Twitter, was a huge platform during the crypto boom, as many discussed and formed their opinions or research. It was interesting to read and follow on all this, but do not take all the tweets seriously. There were many ridiculous tweets mentioning about 100 times beggar when it was just a scam token. There were also many tweets that encouraged trading and short term outlook. You really have to make sure that you're aware of what you're investing in. After all, it is your money, and no one cherishes it more than you. I follow many individuals who were pro on a certain cryptocurrency, and this formed an echo chamber that meant I did not see any other opinions and naturally just reinforced what I wanted to know. Next would be experts may not always be right. We watch the news every day, and there might be a lot of negative or positive news. However, it doesn't mean that it will reflect on the stock market. The economy is not the market, and bad news doesn't mean the market will go down. So the best way is to be consistently investing to eliminate the emotional portion that can affect your investment strategy. Another tip is to build up a base first before venturing into speculative assets. It was good for me that I did not sell all my stock holdings and leaped fully into crypto. Although I did sell my Singapore stocks, but I split them between US stocks and cryptocurrencies. It did came to my mind if I wanted to sell all my stocks holding and put them all into crypto, but I felt that I still needed to have the base of stocks, and my portfolio was still in progress of building. I was glad that I still had my stock holdings with me, and I didn't put them all into cryptocurrency. So all in all, knowing your risk tolerance is a huge part that can help guide your decisions and your portfolio growth. So I hope this video has been interesting. Do stay on the lookout for my next video, which would be my review of my portfolio for end of 2023. Thank you.